Pulver report. It's 9 o'clock. April 29th through May 3rd. Almost May the 4th be with us, but that's going to be on Saturday. So this week we'll be wrapping up the month of April on Tuesday, kicking off with a non-farm payroll week on Friday and the big Fed on Wednesday. Loaded up with earnings as well. We have over 900 companies reported earnings this week, and there's some majors and some notables that we're going to take a look at. So let's get started for the Pulver report today. Nice to be with everybody. Good morning, good morning, good morning. Happy Monday. All right. So taking a look at the SPX, we're sitting at 50.99 from the close on Friday. I think that the market for, let's go back to wave structure. Going back to the weekly time frame and starting from this recent low in the correction of 2022. We had a correction in 2022, put in a bottom in Q4. To me, this looks like a 1, 2, 3, 4, 5. Now, I'm also curious if this is a 1, this was a 2, and this is actually making a push towards wave 3. Wave 3 to wave 4 still, let's say this. Let me use a different thickness. Okay, let's say this is 1, 2. All right. If we're finishing a wave 3 right up here, our pullback to wave 4 is typically a pause coming back to this previous high, which is the all-time high we had in 2021, 2022. Okay. If we go more subswings from this 2022 correction, let me change the color back to black. If we go subswings this way, wave 1, 2, 3, 4, 5. If we've completed a fifth wave, what we're looking for is a 1, 2, 3 wave correction back down into this previous all-time high, possibly back into this 2023 resistance before we'd see a resumption. Okay, now, doesn't mean that's exactly what's going to have to happen. We've been pretty accurate with this rolling over and giving us a chance to, be bearish for the last couple of weeks, and we've seen it. So once we started to go sideways up here, broke the trend line, big sell-off on a Thursday, broke the floor, big sell-off on a Monday, 6 days in a row, and then last week the market kind of caught its breath, stabilized a little bit. Lots of gaps, right? We gapped higher, pushed higher, gapped higher, pushed higher, indecision candle, gapped lower, push lower, gap higher, push higher. Lots of tricky trading last week with the, big earnings reports. It was Meta, it was Tesla was surprised to the upside, it was Google, it was Microsoft. And if we take a look at some of the notables this week, there's a lot of them. Okay, so this morning we've got SoFi, Domino's, semiconductors, NXP Semiconductors. Aftermarket today, NXP, Paramount Global, Transocean, MicroStrategy. MicroStrategy, it'll be interesting to see how volatile it is with coin, crypto related. That's a tight correlation to Coinbase, or not Coinbase, Coinbase too, but Bitcoin. Tuesday before market, PayPal. I've got some exposure on that one with some long options. Coca-Cola, McDonald's, Eli Lilly. Eli Lilly's been one of the top performers this year with Ozempic. It's a pharmaceutical manufacturer. But Ozempic's been one of its shining stars that's brought it to a crazy high valuation. Pinterest, Starbucks, Super Microcomputer, also one of the best performing stocks this year. Advanced Micro Devices, semiconductor space, Amazon, Mag 7, which is now like a Mag 4, Mag 5. I think Tesla's been removed from most people's Mag 7 discussion. Let's see here. Riot Platforms, that's a miner for Bitcoin. Pfizer is also big pharma. MasterCard Health, the consumer. Barrick Gold, DoorDash. Qualcomm, Moderna, Pharma, Peloton. I don't know if that's going to be a meme stock or a squeeze. It's trading like at $3 or something. Coinbase, watching Bitcoin, DraftKings, Block, Apple, big ones for Thursday. And then Friday kind of calming down a little bit. Hershey just for consumer staples. I'm curious what that looks like for food and somewhat defensive. But these are just notables, but there's a ton of reported this week. If I go into the StockTwits calendar, Let's see where the bulk of the earnings are for the week as far as numbers reporting. Okay. Let's see here. Morning, Angela. Good morning, Jacob. Gail, good morning. Ruthann, good morning. Donna, good morning. Chris, good morning. Sally, good morning. David, good morning. All right, so we have bulk of the reports. We'll be kicking off the month of May with the Fed on Wednesday. 274 companies reporting on Wednesday, 318 reporting on Thursday, including Apple, and then Friday 46. So most of the week with earnings is going to be Wednesday and Thursday. So what I'm looking for today is how much movement do we have just today prior to the Fed. I canceled that 51.55 so I can remove this. I do have an NDX trade on this morning, 17,970, which I think is going to be fairly safe. That's over 260 points away. That'd be a pretty big move. The daily average, I think, is right around 275. If we go back to the weekly trading range. Daily average is 305. Oh boy. All right, so that puts me up at possibly, I mean, if we open exactly where we closed and push higher, then, my 17, this should be 17.9. Let me confirm that right here. So 17,970. 17,970. And I'll set a chart alarm at 17,950. I've got a broken wing butterfly sitting there to possibly grab. That's on the call side. And that would be, I'll edit this alert. 17,950. Okay, that'd possibly be the broken wing butterfly where it looks like this. This is the credit that I collected, which is about $1. And price is current price. So we have price down here. If price works its way up, and this is the pin level, right around 19, it is 17,970. So if price works up into that ramp or works up into that pin price today, closer to expiration, preferably after 2 p.m., 2:30 p.m., 3 p.m. ideally, where I can get all of that. I can get all the time decay out of the sell side. It's possible I can take that $1 credit, turn it into maybe another $1, maybe more, max out at like 10, but that's at the close exactly at the spot on price. So we'll see. But if we open up around 17.7, that is just shy of a $300 point move today. So that would be a pretty big day. And I think coming into the Fed, there's a couple ways we see this typically play out during a Fed week. Yes, the month is wrapping up here tomorrow. Fed is on Wednesday, which they're starting off the month probably to set the tone, good or bad. But a lot of times the markets going into a Fed week are very calm and quiet until the Fed on Wednesday, with the majority of the earnings coming on Wednesday, Thursday as well. I would think that's where a lot of the volatility will be sitting, is maybe lackluster movement today, tomorrow, and then it's just buckle up for some wild volatility up or down. Weekly averages, just to throw some numbers out there, this is what I have to expect for the week. So we had our huge sell-off, right? We had our huge sell-off 2 weeks ago, and I think this candle is still going to act as a reasonable level that price can trade inside. So are we going to, in 2 weeks, are we going to, take out that high again? That's probably the most challenging task right now for the markets, is just to recover that quickly. Not saying that they can't, but if we start out right here in the middle, I could see the week, heading up, heading down, giving us another kind of inside trading candle, maybe struggling to break the floor, maybe struggling to break the highs. So, but volatility is expected. I mean, daily averages over 300 on the NDX. If we put that into a weekly context, let's go to the weekly chart. Want to say this is got to be close to 1,000 points for the week. That's not even close. 577. That's wild. You have 577 for the week, and the daily average is 300. That's incredibly volatile then. If you're averaging 300 a week, but for the entire, or for 300 plus for the day, but for the entire week, you can't get over 600. Look at that. So I'm looking at the average trading range. So the daily is 305, but the weekly is only 577. So there's clearly a lot of back and forth volatility on an index like this. This is the NASDAQ. So anyway, back to the charts, what I'm looking at for the week. If we start out pretty quiet, it's all about the Fed on Wednesday kicking off a new month. So I think trying to keep the analysis pretty simple. If we don't take out the highs, I'm looking for a high, low, lower high, and for this level to offer some pretty solid resistance, and then the market trying to push back down. I don't know if we're going to make fresh lows this week, but I could see the market selling back off into previous all-time highs, previous structure levels to kind of reset for the year, and then see if this is a justified gain for the remainder of possibly, Q2 as we get into May and June. You'd have April, May, June for Q2. And that takes us into summer trading. We'll find out. So it's going to be exciting. Not that I want trading to be exciting, but it's going to be volatile. Some earnings plays that we might consider for the week. I will possibly look at an earnings play on MicroStrategy. I might look at a bunch of credit spreads and try to keep it pretty cost effective this week. PayPal, I have some exposure in long options. Trying to think here. Eli Lilly might have some surprising movement, good or bad. SMCI, another volatile play. AMD, a volatile play. Amazon's probably volatile. These are all where they could have surprise moves and go well beyond the expected. So if we have high volatility this week, equities on demand, we might be pricing in some earnings plays, maybe going out to the 10th and playing some of these if it's cost effective. Okay, I'm not necessarily looking to do a bunch of debits this week. Possibly, in the money credit spreads, Pfizer exposure there that I personally have. Anything else that I'm interested in? Coinbase possibly could have some volatility. Apple, of course, since being one of the underperformers, I should say, not worst performer, but underperformers for 2024, has bounced off that 160 handle pretty nicely. I do own some shares of Apple. I've lowered the cost basis a little bit. I think my break even is around 165. Let me double check that. Just jumping into my tracker here. Apple 165.36. 165.36 on Apple. Oh boy. Pre-market's all the way up here towards 173. That's a big jump for the largest company in the world. Earnings aren't until Thursday. And we're looking at a $4 gap on Apple. What's the news? Steady pre-market on Monday. Yeah, absolutely. So, the nice thing is I have a covered call. I think it's at 167.50. I've rolled it out, and I could possibly roll it again. But if I lose the stock at 167.50, that's okay. But I'd like to not have to lose it. We'll see. But earnings on Apple is typically pretty steady. It's just the market, wasn't loving Apple much this year because it was all about Nvidia and all about the semiconductors, which last week did okay. You can still see a lot of eager buyers out there just jumping in on any dip. The 236, the 30 pullback is up above that. It wouldn't surprise me if Nvidia can work its way back to the highs, especially if we have solid earnings this week. Some risk on trading, we could get back to those highs again. I don't know if Nvidia is going to, blow out the highs, but I can see some volatility where we go high to low, have some range trading up here, and then the market's making some sense of, can it justify higher highs and crazy moves? And also, if we're talking about Nvidia at $1,000+ coming from, a few $100s, a split is also being kicked around to see if we go, maybe a reverse, not a reverse split, but like a 10-for-1 split. So we go 10 for 1, all of a sudden Nvidia price goes back to $100. If that happens, that would be crazy. So, okay. So lots to digest this morning and this week. So are we ready? Are we ready? Let's talk indexes: oil, gold, silver, Bitcoin. Dollar index is at 105.80. This week, this is the structure that I'm watching. We're up above this 105.50 support. I think the dollar, in order to maintain its strength and posture right now, we have to stay above 105.50. We have to stay above 105. If the dollar breaks back into this yellow box, this does not look good, in my opinion. Now, it's been a pretty easy find to see dollar strength, but it has not been without its volatility. I mean, if this is dollar strength in this kind of channel capacity, I suppose I've got to be somewhat prepared for that. But looking at the 105.50, 105 level, that to me is where the dollar has to hold firm. If the dollar holds firm here, then sure, looking for 107, looking for drifting higher towards 108. Is that all happening this week? Probably not. But if the dollar can at least maintain this level, we might see a noisy week with trading, which gives us a lot of volatility to deal with. But I still think the dollar looks better compared to other currencies. The Fed is likely not doing anything this week. We know that. We've been watching that for a while. That's where all the expectations have shifted this year. So if we go to the watch tool, probability is Wednesday there will be a pause. This should be like 97 or 98%. See if that loads up. Looks like my watch tool doesn't want to load. All right. If anybody's trying to get into that watch tool, is anybody having trouble with that? CMEgroup.com/markets. Going into the Fed watch tool, it's just not loading up. But probabilities this week are it's no rate. It's going to be a pause, 5.25, 5.5. What I was going to look for is the expectations for the rest of the year. There's still a bit of a chance, and this is like 45% probability that there will be a rate cut coming in September. I think the Fed is going to set the tone this week with that. I think we might see some shifting around this week because of that. So anyway, I don't know why that's not loading up, but probability is we're not going to see a cut or anything today or this week. We get this back to normal size. Here's the week's calendar. So we have CAD GDP, U.S. employment cost index, consumer confidence for the U.S., New Zealand employment. That's all on Tuesday. Tonight we have manufacturing PMI out of China. Wednesday is the big day. We kick off a fresh month. We have PMI numbers out of the U.S. in the morning. We have Joel's job opening in the morning. We have the federal funds rate expected to be the same at 5.5. It's 5.25, 5.5, little window. Pause expected. Press conference at 2:30. Let's see. China has a bank holiday that is Labor Day. Okay. Then we come into Thursday. This will be interesting on the Swiss franc and Swiss basket. Swiss month-over-month CPI. If it comes in as expected or possibly lower, if it comes in red, then I think that continues to show what we've been trading in the flex room. Portfolio builder, one of my favorite positions the last couple of years has been getting long against the Swiss. And if that ends up hinting at additional rate cuts by the Swiss National Bank, that would be pretty sweet. Unemployment claims for the U.S. on Thursday. Japan and China bank holiday continuing into Thursday. Friday, non-farm payroll just on the U.S. side. Sometimes we have those first Fridays of the month where it's Canada and job numbers from Canada and the U.S. This Friday is only going to be U.S. So unemployment rate from the U.S. non-farm payroll expected steady at 243. Unemployment rate at 3.8. Average earnings at 0.3. So we've seen them. The jobs have been. I'll just say steady. I mean, we had a big one. 303 was pretty big last month. Revision from 353 all the way down to 229. That's a big revision to the downside. But we still beat expectations steady in the 200Ks. So 243 expected, probably going to deliver something comparable to that, good, bad, and different. But to me, non-farm is taking a backseat to the Fed on Wednesday. That's where I think this week is going to be trying to, glean all this information of what to do and what to move, how to move. It's all going to be on Wednesday. So Wednesday, Thursday, Friday, expecting a lot of volatility. All right, dollar index, oil. Oops. Oil is trading at 83.26. I still like oil bullish as long as we stay above 77, which is right here. So we could have a bit of a, I guess a high, low, high, lower low. We could pull back into this channel. If we find channel support, I'll be looking to get long with a pretty tight stop and see if we can revisit the highs. This is obviously a concern for inflation, sticky inflation. If we start to see, higher oil prices, there's going to be some supply and demand drama most likely that plays out. If we start to creep up into the high 80s or get into the $90 zone, we might start seeing some inventory levels get thrown around just to start to restrict price from going too high, which, I mean, could we stop oil from going above $95 to $100 this year? I don't know. I mean, I think just from a technical standpoint, this is where oil lives, is we don't go too much higher than 95. We don't go too much lower than 65. And it could be volatile, but like I said, I'm still bullish on this posture right now. See the oil just makes higher highs. So I'm going to stick with that until proven otherwise, and until this channel breaks. That's oil. Gold trading at 23.34 after just a monumental charge and surge the first part of the year. I mean, gold was here at the beginning of the year, right around 2,000, just above 2,000. We had a fake out in February, and from there, this thing just absolutely ripped it, over 22.5% to the upside. And things have calmed down a little bit, but gold is probably still an attractive play, especially to diversify, whether it's just futures trading, whether it's actually owning gold, whether it's trading the paper at GLD and other ETFs, trading miners, GDX, and I think Barrick Gold was one earnings coming out this week. But still, it's just a little diversified exposure to see something. It's non-correlated with the upside of the market. It's kind of non-correlated to the dollar, inversely correlated. So dollar strength, gold weakness, or vice versa. But I still like this measure move to the upside, and that goes all the way up towards 24.67. I guess the problem right now for me is, obviously gold gets better and more attractive if we're just blowing out all-time highs, and that gets super exciting. That's probably a bigger concern if you think about it. Gold to the upside would be nice to have as a hedge, but I don't think gold is necessarily going to save everyone's portfolio. If we go to all-time highs in gold, there's probably some other stuff that's breaking in portfolios, which doesn't necessarily mean a good thing, right? So that's why I continue to position where I'm pretty agile both directions. I mean, I'm willing to sell, I'm willing to buy, I'm willing to protect own positions. I'm willing to take some stabs at earnings plays and index plays. But I think we could deal with, after this run, we could deal with some indecision here on gold. Longer term, the exposure is not that bad. I'm going to be a little bit pickier because I think silver is still a better setup at this time. That if we have a correction that comes back to like 2270 or even 2200, that's probably where I'd like to see a chance to get back in on gold and go long. Just my thoughts. That's gold. I think silver is a better trade technically. So I do like this one. We're at 27.22. I think as long as gold or silver stays above 26, that to me looks pretty good. Stay firm above 26. Hopefully we'll see buyers continue to step back in. To breach the highs, we'd be getting silver above $30. My first measure move is all the way to 35.67, and I'm pretty long on silver. Trying to get to this first symmetry move, playing this with some options on SLV. I'm long at 20 on SLV, and we're trading at 24.89, and we had highs up here at 27. So trying to get back to the $27 highs. I've got some covered calls sitting at $30, and right now the little decline has helped start to achieve a majority of that profit, but I still want to see some higher pushes in silver. Bitcoin Bitcoin just stabilizing here around 62,500. One thing to keep in mind, if the NASDAQ is up this week, if tech stocks are up this week, if computing power and semiconductors and all this stuff is up this week, I wouldn't be surprised if Bitcoin heads back up to highs. So, I mean, to me, this is still a risk-on asset. It's not full-on diversified. It's not a hedge. It's an alternative, but this still correlates pretty strongly with the NASDAQ in tech and risk appetite. So if the market is up this week, then sure, Bitcoin gets back to highs. May not be just this week, but I'm saying in general, we kind of look to revisit the $73,000, $74,000 high. And then the milestone would be, can we break and go all-time highs and start to see a resuming of the uptrend, right? Is 100K possible in Bitcoin this year? Maybe. I mean, if it breaks 74, why not? That's actually having some decent corrections. I mean, this was double digits. We had a 19% correction on Bitcoin off the all-time highs. So I mean, traders, investors on Bitcoin are a little bit conditioned to see 40, 50, 60, 70% pullbacks. So having this thing just go sideways for 20%, I don't think it's making people too nervous. But from this low to this low, to me, this is just correction. So we could look like so until we're breaking this structure, breaking highs, and then possibly heading higher. That's a little Bitcoin. Other currencies, let's do a quick peruse through the FX. Aussie CAD looking good. We're long on Aussie CAD in the flex room. Where are all my currencies at here? Aussie CAD, we're bullish. Aussie Swiss, we're bullish. We're up to some fresh highs on Aussie Swiss. That's great. Aussie Yen, super volatile, but we had that little trend line test last week, and it's been up on a rip on the dollar yen and the Aussie yen. You can see the volatility there. Dollar yen, I was looking at this last night. Are we talking intervention? Seems to be something with that candle. High at 160, low at 154. Frickin' BOJ, man. Suspected intervention. There you go. So everyone's been talking about it. There's what your intervention looks like. What's the number? Well, it hit 160. So 160 means something, and you had a 530 pip day. I don't know if this happened in a tradable window. Okay, so we have, it must be coming right out of the gates this morning. This was last night around 9:30 p.m. Eastern time. Spikes up to 160. Sideways, sideways, sideways. I mean, that to me looks pretty suspicious. That's a big candle for the 5-minute, and again and again and again. Man, I mean, that would be so challenging to trade. I keep telling traders, like, stop trying to trade the stupid intervention stuff. Be careful on the end crosses. Trade them small. I mean, this 5-minute candle. So this 5-minute candle is 160 pips. Okay. And then this candle is almost 200 pips, 190 pips. Wild stuff. And here we are just kind of settling back in. So, yes, it's not 160. All of a sudden we're 350 pips off those highs, but there's something about that 160 handle that at least caught some attention to the BOJ. Going into an FOMC week, what's going to be interesting now is, does the market go anywhere for the rest of the week? Dollar yen for the rest of the week, noticing intervention, speculating this intervention. Here we are wondering what's next. I'm still very cautious of a trade. If it breaks lower, okay, if it breaks lower, I'm cautious in the sense that if I took a trade to the downside, I would have a super tight stop loss. If I'm right, off we go. If I'm wrong, get me the heck out of this thing and possibly reverse and see if we can get back to the highs at 160. Like, it's not a complicated trade, but the Bank of Japan potentially showing its hand by this level of intervention. Opening bells gapped up, SPY's at 510. All right, we'll take a look at the indexes here in just a minute. But yen stuff, I mean, there's just a lot of movement on the day. If we go to currency strength, should be reflected in this chart here. There you go. So from the weakest to by far the strongest, and starting to settle back in. Still volatility-wise, way up here on the vertical axis. Everything else has been a non-mover, and it's all about the BOJ coming into this week. So stupid stuff, man. I mean, I'm telling you, like it's gonna be very dangerous. It might seem exciting, but that's not why we trade. It is so unpredictable to be a yen trader right now if you're trying to make consistent gains. I still think the carry trade is alive and well, and we're gonna see that. If I'm right, then we're not going too much lower than this low, or we come back in and retest what was resistance at 152. Let's say we have some intervention and we have a little bit of relief, and then 152 all of a sudden we hit 152 and then bounce back up, and we're making fresh highs again in the next couple of months. I mean, you don't know that, I don't know that. All I'm going to do is watch. So to me, the unraveling of this carry trade as BOJ intervention takes us all the way out to this open space on the higher time frame, and it is the most obvious topping pattern where we'd have to have some type of like head and shoulders trade. We break this trend line. We take back all these levels at 152, and we're well below that. We'd have to be below 150, 145 even before I'm remotely thinking that we've got sustained Japanese yen strength. Okay, have some chart alarms going off here. IWM at 199. That should be some fresh highs. 199.69. All right, so we're carving back a little bit of retracement. Highs all the way up here at 212 on the IWM. SPY and Qs. SPY's trading at 510. A little bit of a gap higher, which continues with the patterns we saw last week. So we had higher, gap down on Meta, and then gap up and a push up because of Google and Microsoft, and we're pushing a little bit more today. So we'll see if the market's going to make a big bullish move prior to the Fed, or if it's going to be just wait and see, calm waters until Wednesday. But 510 being watched. I have a NASDAQ position. So 912, that should have been, that's probably a gap. Let me check here. I've got a 970, so I need to watch that pretty carefully. So we had a close on the 26th. I need to go NDX. There we go. Yep, there's a gap right there. So we had a 17.4. Did we not gap much? Oh, never mind. I'm still 260 points clear of my level. All right, I was looking at the wrong index. So I've got a 17,970 on the NDX for $1 credit. That's my broken wing butterfly. I'll be watching that price. Chart alarms up here at 17,950. So here are some gamma levels on the day. So we're trading 510.72. We've gapped up a little bit. All my big gamma levels that I see are bullish today as far as the pre-market. So 513, 514, 515. Mondays are typically pretty quiet, not all directional days. To me, if we got into these highs for the day, I'd probably look to fade that move either by end of the day or into Tuesday, Wednesday trading. I might just be as neutral as possible, trade the Fed all by itself on Wednesday for some volatility. Pretty inexpensive way to trade that, depends on applied volatility. But if I did a long straddle, long strangle for a 0 DT on Wednesday, that typically works out to be a good trade. We could see a $6, $7, $8 move as long as I'm paying only $2, $2.50 or so for a long straddle, long strangle on the SPY, and we get a $6 or $7 move. That's enough to make some money on Wednesday, Thursday. So I'll evaluate that, kind of just take it in stride. And there's going to be a bunch of earnings stuff going on this week. So let's go into the actual. This is live market gamma levels again. 513, 514, 515. Those are my bigger strikes coming out right now. One thing we could look at this morning would be, because we had a gap from close Friday, open today. My least favorite thing to see when the market is moving intraday, especially in the first 30 to 60 minutes of trading, my least favorite thing is to see close, open, and it just goes straight up to a gamma level. I hate those trades because I feel like I can't get the entry or an entry that I want. So what I'd like to see would be We have a bit of a red candle coming back in. We fade that a little bit more, maybe not fill the gap entirely, but see if that's enough to then directionally get the market to move a couple of dollars. If it fills the gap, great. We kind of play that as well. But Mondays are typically, range bound days. If I want to look at something on the SPX right now to stay, out of the way, let me see here, SPX. So we gapped up. I'm looking at real-time gamma levels at 5,100. It's only 20 points lower. So let's see. Yeah, I'm probably not going to force a trade today. NDXs is enough. I've got plenty of opportunities this week for earnings, Fed on Wednesday, volatility Wednesday, Thursday, Friday. I don't need to, force a trade today. So I will probably spend a majority of my week pricing out earnings plays just to see if it's worth taking, your AMDs, your SMCIs, your micro strategies. I think Coinbase is in here as well. Yeah, we've got plenty of trades that would offer up some good volatility this week. We can do that cost effectively with some credit spreads. We can do that with all sorts of variety of option trades to try to make some high probability moves. And all we need is volatility, which I think we're going to get it. It's just how big are these earnings moves? Are they big surprises with the Fed this week? And the market's just ready to open up the floodgates for volatility. If that's the case, this should be pretty easy for earnings because the market's just going to have and they might not go anywhere. That's what's funny is we might have the day before earnings prices sitting right here, and then earnings is way up here or way down here. All I want to see is that initial reaction. If it's a big move above or below and it's beyond my expected move that I calculate, that makes earnings very easy. Okay. The other side of that is if this is where it is and it barely moves, then there's obviously strategies for that. But these strategies that if you're trying to contain earnings prices, that strategy has not worked this year. We've been seeing higher than expected moves and higher volatility. We're seeing the trading ranges from a daily and weekly standpoint well beyond what they've been the last 6 to 12 months. So the market is certainly embracing some higher volatility, and we got to be prepared to trade that. It's good to be you can be long options because we have higher than expected moves, but if you're selling options, it's tough to contain earnings plays, but it's nice to see that IV like expand and then shrink within a couple of weeks. But you have to have longer duration for that. You can't trade, single day or, just a couple of days out because the IV stays so high with these earnings plays. All right. Okay. So watching the SPX, watching the SPY, go back to the charts here. We'll wrap up in a couple of minutes. And let me check one thing. Okay. And I'm going to pop back into my session again here at 10 o'clock. I'll dual stream with A1 Trading. I'm going to jump in with Nick and the team at 10 a.m. So I think for my end of the Pulver Report, and if you have any questions, let me know. We'll take a small break here in a couple minutes, come back in at 10 o'clock and stream, and Equities on Demand. I'll run that trading room at 11 a.m. and we'll see what we have lined up for the week. We'll probably just start pricing in options, pricing in earnings plays, pricing the options out for those earnings plays. I like looking at earnings plays now because we're just starting the week. So if we go into it kind of price neutral, we're expecting to see up or down movement. If the week has barely started, I like kind of being neutral to then look at what's the expected move for the week, what's the expected move plus earnings for the week, rather than seeing today or tomorrow we have a big move already with earnings, and then we have the Fed on top of that, and then we have an earnings report on top of that. So I like to be kind of the smallest weekly start pricing these in, maybe go out to Friday if we have days to manage, or go out to next week Friday, see if we have a couple extra days to manage it. And all we need is volatility, good, bad, and different. But I'm going to try to be very cost effective on how I trade earnings this week because there's so many stocks that I'm considering with high volatility. I'd be pretty happy making like 65, 70 cents on the dollar, taking both directions, getting a good blowing through the expected moves, and then just taking a fraction of the profit. So if I get 70 cents on the dollar, I walk away with a net 40 cents that I can trade both directions. If that doesn't make any sense, it's because you're not an options trader. All that means is this: price is right here. If I did a bull put spread above and I did a bear call spread below, I collect, let's say I get 70 cents on the dollar. So I collect 70 cents and I'm only risking 30 cents. Well, I can lose on this trade. I can win on this trade. So this is a plus 70 and this is a minus 30. I walk away with plus 40 cents. All I need is price to move, right? I win one, I lose one, and I still walk away profitable. That's way cheaper than saying, well, it's going to be an earnings play. So here's price. I'm going to go long at the calls, long at the puts. I need price to go something up or down, because right now what I'm noticing is we are paying for almost all of the expected move. And that makes it very challenging to get paid the way you want to get paid. If you're trying to, make it cheaper, you got to cap your upside. If you want these big blowout moves, your fingers crossed that the market is willing to go beyond the expected move. And sometimes that can be very expensive. So when you're talking about a stock like MicroStrategy that's trading over $1,000, that's probably a $50 to $100 debit if you want to go straddle or strangle. So anyway, option strategies, we'll talk about them this week in Equities on Demand. We'll start that today at 11 o'clock. Okay, I'm going to wrap it up here for the poll report for Monday. I'll jump back in 20 minutes. Come back and join me again at 10 o'clock when I'm tag teaming with A1 Trading and the team, and I'll see you in a little bit. Okay, if you pop into that session as well, Nimar, I see you there. The move to 160 happened in 1 minute. Okay, let's go back to the dollar yen for a second. So that it's not surprising. There's dollar yen. There's a 15-minute chart. I still wouldn't be surprised if it doesn't go lower. Intervention, yes, but man, just stop thinking about this stupid system. Here's what I say. I don't think the intervention is going to feel sustainable. If it is, it's going to be obvious. If it's not, it's just a one-off. Listen, go back to 2022 and see what intervention looked like. Intervention in 2022 was not just a one and done, right? You go back to the dollar yen in 2022, it was this. We had intervention right here, and right here before it finally turned the corner. It might mean that, okay, they're starting to pay attention at 160. Doesn't mean that it can't go higher. If you look at this was several hundred pips higher. This was intervention with a high at 145 and then intervention again at 152. You're 500 to 700 pips away from that high. It's like you can't tell me like, oh, they intervene, I'm going to call the top and be wrong by 500 pips and hang on to it and hopefully you get lucky. So I'm just telling you, man, be careful, trade small in these yen crosses. They can be wild. So I'm still going to take the trades that I'm taking. I'm letting the robots do the work. If this week is just a massive indecision candle, we're going to see where the next kind of high or low is sitting. So anyway, all right, come back in 17 minutes at the top of the hour, 10 o'clock, youtube.com/Chris Pulver Trading, and I'll be with the A1 Trading team, and I'll see you soon. All right, thanks, everybody. Bye.